How to start investing in stocks. Investing in stocks is easier than beginners might think. All you need is an online brokerage account to get started. Investing in stocks just means buying tiny shares of ownership in a public company. Those small shares are known as the company's stock, and by investing in it, you're hoping the company grows and performs well over time. If that happens, your shares may become more valuable, and other investors may be willing to buy them from you for more than you paid for them. That means you could earn a profit if you decide to sell them. One of the best ways for beginners to get started investing in the stock market is to put money in an online investment account, which can then be used to invest in shares of stock or stock mutual funds. Choose an investing account. Generally speaking, to invest in stocks, you need an investment account. For the hands-on types, this usually means a brokerage account. For those who would like a little help, opening an account through a robo-advisor is a sensible option. An important point: both brokers and robo-advisors allow you to open an account with very little money. A robo-advisor offers the benefits of stock investing, but doesn't require its owner to do the legwork required to pick individual investments. Robo-advisor services provide complete investment management. These companies will ask you about your investing goals during the onboarding process and then build you a portfolio designed to achieve those aims. This may sound expensive, but the management fees here are generally a fraction of the cost of what a human investment manager would charge. Most robo-advisors charge around 0.25% of your account balance. And yes, you can also get an IRA at a robo-advisor if you wish. Learn the difference between investing in stocks and funds. Don't worry. Stock investing doesn't have to be complicated. For most people, stock market investing means choosing among these two investment types: stock mutual funds. Mutual funds let you purchase small pieces of many different stocks in a single transaction. Index funds and ETFs are a kind of mutual fund that track an index. Individual stocks. If you're after a specific company, you can buy a single share or a few shares as a way to dip your toe into the stock trading waters. Building a diversified portfolio out of many individual stocks is possible, but it takes a significant investment. The upside of stock mutual funds is that they are inherently diversified, which lessens your risk. For the vast majority of investors, particularly those who are investing their retirement savings, a portfolio comprised mostly of mutual funds is the clear choice. Set a budget for your stock market investment. New investors often have two questions in this step of the process. Number 1, how much money do I need to start investing in stocks? The amount of money you need to buy an individual stock depends on how expensive the shares are. Share prices can range from just a few dollars to a few $1,000s. If you want mutual funds and have a small budget, an exchange-traded fund, ETF, may be your best bet. Mutual funds often have minimums of $1,000 or more, but ETFs trade like a stock, which means you purchase them for a share price, in some cases, less than $100. Number 2, how much money should I invest in stocks? If you're investing through funds, have we mentioned this is the preference of most financial advisors? You can allocate a fairly large portion of your portfolio towards stock funds, especially if you have a long time horizon. A 30-year-old investing for retirement might have 80% of his or her portfolio in stock funds. The rest would be in bond funds. Individual stocks are another story. A general rule of thumb is to keep these to a small portion of your investment portfolio. Focus on investing for the long term. Stock market investments have proven to be one of the best ways to grow long-term wealth. Over several decades, the average stock market return is about 10% per year. However, remember that's just an average across the entire market. Some years will be up, some down, and individual stocks themselves will vary in their returns. But for long-term investors, the stock market is a good investment no matter what's happening day to day or year to year. It's that long-term average they're looking for. Stock investing is filled with intricate strategies and approaches, yet some of the most successful investors have done little more than stick with stock market basics. That generally means using funds for the bulk of your portfolio. Manage your stock portfolio. While fretting over daily fluctuations won't do much for your portfolio's health, or your own, there will of course be times when you'll need to check in on your stocks or other investments. If you follow the steps above to buy mutual funds and individual stocks over time, you'll want to revisit your portfolio a few times a year to make sure it's still in line with your investment goals. A few things to consider: if you're approaching retirement, you may want to move some of your stock investments over to more conservative fixed income investments. If your portfolio is too heavily weighted in one sector or industry. Can I invest if I don't have much money? There are two challenges to investing small amounts of money. The good news? They're both easily conquered. The first challenge is that many investments require a minimum The second is that it's hard to diversify small amounts of money. Diversification, by nature, involves spreading your money around. The less money you have, the harder it is to spread. The solution to both is investing in stock index funds and ETFs. While mutual funds might require a $1,000 minimum or more, index fund minimums tend to be lower, and ETFs are purchased for a share price that could be lower still. Are stocks a good investment for beginners? Yes, as long as you're comfortable leaving your money invested for at least 5 years. Why 5 years? That's because it is relatively rare for the stock market to experience a downturn that lasts longer than that. But rather than trading individual stocks, focus on stock mutual funds. With mutual funds, you can purchase a large selection of stocks. What are the best stock market investments? In our view, the best stock market investments are often low-cost mutual funds, like index funds and ETFs. By purchasing these instead of individual stocks, you can buy a big chunk of the stock market in one transaction. What stocks should I invest in? Cue the broken record. Our recommendation is to invest in many stocks through a stock mutual fund, index fund or ETF, for example, an S&P 500 index fund that holds all the stocks in the S&P 500. Is stock trading for beginners? While stocks are great for many beginner investors, the trading part of this proposition is probably not. Maybe we've already gotten this point across, but to reiterate, we highly recommend a buy and hold strategy using stock mutual funds. That's precisely the opposite of stock trading, which involves dedication and a great deal of research. Stock traders attempt to time the market in search of opportunities to buy low and sell high. Just to be clear, the goal of any investor is to buy low and sell high. But history tells us you're likely to do that if you hold on to a diversified investment, like a mutual fund, over the long term. No active trading required. That's it for now. If you liked the video, don't forget to subscribe to my channel, and press that bell icon so you never miss an update from our side. Thank you.